Here is a comprehensive summary of The Price of Time, The Real Story of Interest by Edward Chancellor. Introduction. The Price of Time, The Real Story of Interest by Edward Chancellor delves into the historical, economic, and philosophical facets of interest rates. Interest, often taken for granted, is a crucial component of financial systems and economies. Chancellor explores how interest rates have shaped human civilization, influenced economic cycles, and contributed to financial crises. The book provides an in-depth analysis of the role of interest in shaping the modern world, from ancient times to the present day. Chapter 1: The Origins of Interest. Interest rates date back to ancient Mesopotamia, where they emerged as a way to compensate lenders for the risk and time value of money. In early agrarian societies, interest rates were often high due to the uncertainty and risks involved. These early forms of interest were primarily tied to agricultural loans, where the cyclical nature of harvests influenced the lending and repayment periods. Chapter 2: Ancient Greece and Rome. In ancient Greece, interest was both philosophically debated and practically applied. Philosophers like Aristotle condemned usury, considering it unnatural. However, in practice, interest was a vital part of Greek commerce and finance. The Romans, on the other hand, had a more structured approach to interest, with legal caps on rates and a sophisticated banking system that facilitated trade and economic expansion. Chapter 3: The Middle Ages. The Middle Ages saw a conflict between religious doctrine and economic necessity. The Christian Church condemned usury, influenced by biblical teachings. However, the demand for credit persisted, leading to creative ways of circumventing the prohibition. Jewish lenders, not bound by Christian doctrine, played a significant role in medieval finance. Additionally, Italian city-states like Florence and Venice developed early banking systems that included interest-bearing loans, despite ecclesiastical opposition. Chapter 4: The Renaissance and Early Modern Period. The Renaissance era marked a shift in attitudes towards interest. With the rise of commerce and the development of capital markets, interest became an accepted part of economic life. Financial innovations, such as bills of exchange and government bonds, emerged. Key figures like John Law and the Medici family leveraged interest-bearing instruments to amass wealth and influence. Chapter 5: The Enlightenment and Industrial Revolution. The Enlightenment brought a more scientific and analytical approach to economics. Thinkers like Adam Smith and David Ricardo recognized the importance of interest in capital allocation and economic growth. The Industrial Revolution further underscored the role of interest rates in financing technological advancements and industrial expansion. Banks and financial institutions became central to economic development, providing the necessary capital for large-scale enterprises. Chapter 6: The 19th Century and Classical Economics. The 19th century saw the maturation of classical economics, with figures like John Stuart Mill and Alfred Marshall elaborating on the theories of interest. Interest rates were seen as the price of capital, balancing savings and investments. The gold standard era provided a period of relative interest rate stability, fostering international trade and investment. Chapter 7: The 20th Century and Keynesian Economics. The 20th century brought significant economic upheavals, including the Great Depression and World War II. John Maynard Keynes revolutionized economic thought with his theories on interest rates and government intervention. Keynes argued that interest rates should be managed to stabilize economies, advocating for lower rates during recessions to stimulate investment and consumption. Chapter 8: The Post-War Boom and Bretton Woods. The post-war period saw the establishment of the Bretton Woods system, which aimed to create a stable international financial order. Interest rates were relatively low, contributing to economic growth and the expansion of the middle class. However, the system eventually collapsed, leading to a more volatile financial environment. Chapter 9: The Rise of Neoliberalism. The late 20th century was characterized by the rise of neoliberal economic policies, emphasizing deregulation and market-driven interest rates. Central banks, particularly the Federal Reserve, gained prominence in managing economies through monetary policy. Interest rates became a primary tool for controlling inflation and stimulating growth. Chapter 10: The financialization of the economy. The financialization of the economy in the late 20th and early 21st centuries saw a shift towards finance-driven growth. Interest rates played a crucial role in this transformation, influencing everything from housing markets to corporate strategies. The proliferation of complex financial instruments and the growth of the shadow banking system were notable developments during this period. Chapter 11: The Global Financial Crisis. The global financial crisis of 2007 to 2008 highlighted the dangers of low interest rates and excessive risk-taking. Central banks had kept rates low to stimulate growth, leading to asset bubbles and unsustainable debt levels. The crisis underscored the need for prudent interest rate management and the risks of financial instability. Chapter 12: The Era of Ultra-Low Interest Rates. In the aftermath of the financial crisis, central banks adopted ultra-low interest rate policies to support economic recovery. These policies, including quantitative easing, had profound effects on global financial markets. While they helped stabilize economies, they also raised concerns about long-term impacts, such as asset bubbles, wealth inequality, and reduced incentives for saving. Chapter 13: Interest Rates and Inequality. Chancellor examines the relationship between interest rates and economic inequality. Low interest rates tend to benefit asset owners, as they drive up the prices of stocks and real estate. This can exacerbate wealth inequality, as those without significant assets see little benefit. The distributional effects of interest rate policies have become a contentious issue in economic debates. Chapter 14: The Future of Interest Rates. The future of interest rates is uncertain, with many challenges and potential changes on the horizon. Factors such as demographic shifts, technological advancements, and changing economic paradigms will influence interest rate trends. Chancellor discusses potential scenarios, including the possibility of a return to higher rates or the continuation of low-rate policies. Chapter 15: Philosophical Reflections on Interest. Chancellor concludes the book with philosophical reflections on the nature of interest. He explores how interest rates reflect deeper truths about human nature, time preference, and the balance between risk and reward. Interest, in many ways, is a measure of the value we place on the future versus the present. Conclusion. At the price of time, the real story of interest, it provides a comprehensive and insightful exploration of interest rates, tracing their historical evolution and examining their impact on economies and societies. Chancellor's work underscores the importance of understanding interest rates not just as financial instruments, but as fundamental components of economic life that influence behavior, shape policy, and reflect the complexities of human nature. Through historical anecdotes, economic analysis, and philosophical reflections, the book offers readers a deep appreciation for the pivotal role of interest in shaping the world we live in. Key themes and takeaways. 1. Historical perspective. Understanding the historical evolution of interest rates helps contextualize their current role and significance in modern economies. Chancellor provides a thorough historical account, from ancient Mesopotamia to the present day. 2. Economic impact. Interest rates are crucial for capital allocation, economic growth, and stability. They influence savings, investments, and consumption patterns, affecting overall economic health. 3. Financial crises. The book highlights the role of interest rates in financial crises, illustrating how mismanagement or misunderstanding of interest can lead to economic turmoil. 4. Policy implications. The management of interest rates by central banks is a key policy tool. The book discusses the implications of various interest rate policies, including their impact on inflation, unemployment, and financial stability. 5. Social and ethical considerations. Interest rates have social implications, particularly concerning wealth distribution and inequality. Chancellor examines the ethical dimensions of interest, including the balance between lender and borrower interests. 6. Future trends. The book speculates on future interest rate trends, considering factors such as technological change, demographic shifts, and evolving economic theories. Final thoughts. At the Price of Time, The Real Story of Interest by Edward Chancellor is an enlightening and comprehensive exploration of a fundamental economic concept. By tracing the history, economic impact, and philosophical underpinnings of interest rates, Chancellor provides readers with a nuanced understanding of how interest shapes our world. This book is a valuable resource for anyone interested in economics, finance, or the broader implications of interest rates on society and human behavior. This summary aims to capture the essence and key points of Edward Chancellor's The Price of Time, The Real Story of Interest, providing a broad overview of the book's content and insights.